Good morning. This is my London market update. It's February 14th, 2020, Valentine's Day. So let's get right on to it. We've got spot gold unchanged this morning at 1575.60. We've been as high as 1578 and as low as 1573. Silver fairly firm, up about 4 cents at 1768, up 0.25%. Right near the highs, 1772. So precious metals still undergoing consolidation. Stock market yesterday did drop. The Dow was down over 100 points. Right now, the Dow future is up 43 at 29,465. S&P 500 up 7.2%. NASDAQ 100 future up 1/3. We've got the FTSE 100 index down 11 at 74.29. Now to the foreign exchange markets. We've got sterling at 130.40. We saw a big rally in sterling yesterday. We saw the Chancellor of the Exchequer resign, and the markets took that as a positive. We'll have to wait and see, though, for the longer term picture in cable or sterling. Euro remains fairly weak, 108.42. Unchanged though this morning. Dollar down slightly against the yen, 109.79. And the dollar is unchanged against the Chinese yuan at 698. Crude oil, WTI, up 1/3%. Right now, holding on above 50. We're at 51.75. What about the bond markets? First of all, let's look at the 10-year U.S. Treasury yield. Right now it's at 160, down 2 basis points. So right now in terms of support for the yield, it's around 155. Of course, when yields drop for bonds, prices go up. They're inversely related. I've been talking about recently about the European bond market, especially Greece. The fact that Greece, who was paying 30% a few years ago to borrow for 10 years, are now paying less than 1%. So this morning, the Greek 10-year yield is at 0.92%. So less than 1%. Greece is paying less than Uncle Sam to borrow. What about the UK bond market, or the gilt market, which is the government bond market for the UK? UK, of course, we've left the EU. We're not part of the euro. We have our own currency. But this is spilling over. All the rush to buy government bonds in Europe is spilling over to the UK, even though we're not part of the Eurozone. I've noticed also that sterling has risen a good amount versus the euro. We are now almost up to 120. So this is all part of this. And the 10-year gilt yield right now is at 0.63. It is positive though, but I think it's got a lot further to go down. It's down 2 basis points this morning. What this means is that UK savers, investors cannot protect themselves versus the debasement of the currency or inflation. We all know that inflation is running a lot more than 2%. Yes, the official numbers tell us is 2 or 3%. But yeah, how can you protect yourself safely if the 10-year government yield is less than 1%, while the debasement of the currency is more like 3, 4, or sometimes even 5%? So that's what's going on there. Today, I like to look at the volatility index, because that's a good indicator of market sentiment, of how complacent traders, investors, or speculators are. So this measures the volatility, of course, of the options on the stock market indices. This is, of course, on the S&P. This is called the VIX, of course, another name for it. And you can see here that in the beginning of February or end of January, this index spiked almost to 19. That was, of course, when we had the situation in China arise about what's going on there health-wise. And ever since then, As the Chinese central bank, Chinese government announced measures, fiscal and monetary measures to help buffer the risk of a economic slowdown, this index has dropped. Of course, investors on Wall Street and elsewhere expect central bankers to help out, of course, no matter what. We saw the other day, Jay Powell said that if things get worse, if there's an economic slowdown, they will aggressively use their tools, and that means more money printing. The other point I would make before I finish this report is that the repo market is still under life support by the Federal Reserve Bank of New York. We're seeing still a lot of demand for help from the New York Fed in the repo market. Don't forget, until September last year, the repo market was a market where participants dealt amongst themselves, financial institutions, without the help of the central bank since 2008, 2009 financial crisis. So for over 10 years, the repo market was functioning on its own. Right now, it's been on life support, and I don't think the Federal Reserve will be able to take the support out. So it's getting very interesting. But one thing I would point out, this VIX index is telling me that we could be near a top in the stock market. Does that mean I think it's gonna crash? Not necessarily. I think we just due for a correction. Every day I look at the markets in the morning, the Dow seems to be up no matter what. You probably notice in the US as well, when the markets open at 9:30 New York time, that even though the futures might have been down in the pre-market, like during European hours, it zooms up magically a lot of times. But yesterday, we saw the market not be able to close up, as I said, as the Dow finished down 128 points. So there you go. That's my London market report for Friday, February 14th, 2020. If you enjoyed this report, make sure you hit the like button, share the report far and wide, and you can also follow me on Twitter and Facebook. I wish you all a great day. Take care. Bye.